The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And my given Indian name is Sharknado 2, the Sharknado of Wall Street. And we've got a little bit of rock and roll, a little bit of country going on as the Fed has just come out with its decision. They tried to drive the market up a little bit. It's starting to pull back. I've got kind of a fairly decent belief that we're seeing the Dow and some of those industrial stocks that should probably be rallying today, feeling just a bit heavy. And what do we have? The we're what 16,870 on the S&P, off 41 points, and of course the Nasdaq up 21 points. But when we get to the S&P, a little bit more vague out here. It's been up, it's been down. It's up 1 point right now. 2.1 billion shares. I think we're going to have a fairly good argument between the bulls and the bears before the end of the day. But I don't see any kind of rapid wanting to buy a higher price. I still see the same kind of Pavlovian response, which is we get 10 points down in the S&P and people start buying. And as soon as it hits unchanged on the day, not so much interested in buying anymore. And they'll buy every dip. They won't buy any breakout. And normally the market just stalls off, and then we pull back a little bit, and then it happens all over again, almost a groundhog-like day. And what does it all mean? 42, if you know what that means. Anyway, it is an interesting day. We'll see how this sorts out. My guess it's going to be in the last 30 minutes of the day. I continue to think that we're seeing some funds outflows, especially from the hedge funds that have been changing and chasing results. Of the last few days, it looks to me like they've been extremely active in a handful of stocks that have huge short interest, and moving those stocks up after hours. Probably the moves in these things not justified, at least on a day or by the news, more of we're just going to mark this thing up to infinity, wait till the shorts cover, and as they cover, we're going to be more than willing to hand our longs back to them, and when we're gone, that'll be it. And we're already seeing some of that. I saw an article today about Carl Icahn punting a third of his Dollar General position the day that the merger was announced. So we are seeing people exit stage left with cash. And, of course, yesterday we talked about margin being, as a percentage of the S&P and NYSE, way, way too high, at least way too high for my taste. That means that any kind of severe move would easily take out a great deal of traders. And probably why we see such quick moves to the downside and such slow moves to the upside, and probably people not willing to buy on margin once they go past whatever unchanged on the day is, for the most part. You kind of see it maybe creep up after it. But, we were down fairly extensively. We've had a volume to the downside. And the question now is, can they run this market with what the Fed has said? And I ran through it fairly quickly. There's not a lot in there other than they're very bipolar about the job market. Job market, good, getting better, and there's a lot of unemployed people. So I don't know which one from reading the statement. Maybe you've got to read it with a Ouija board or something, but just the language looked a little bit bipolar to me in it. And you think somebody in the den saying slack, but I don't know exactly. I think they want to have their cake and eat it too through the election. I think they don't want to monkey much with it. My guess is that we are coming for that hike in interest rates probably right after the election, and they won't say anything about it. And they'd love to do it now, but they don't want to get again in front of the elections. So we've got the NASDAQ up 24 points, fairly decent volume. Of course, we've got some of these blowout stocks and stocks like Twitter, where everybody is partying like it's 1999 again and the dot-com bubble. But was it really worth, another 20 points one day later? Probably not. But they caught a lot of people on the wrong side. And I think we're still seeing part of that in the NASDAQ, and that is some of these stocks that were weighing heavily, people were betting on them breaking out the bottoms. Instead of shorting high-volume tops, they were shorting high-volume lows and hoping that they could break these stocks back down. And so far, not doing that. Up 4 points on the S&P cash, and volume getting a little brisk out here, but I still think that we've got probably 75-80% chance of going to 1938 before we hit 2000. So I think the overwhelming evidence in the returns for most stocks show a weakness, and many of the stocks missing their earnings, even though people are saying that they made them. They made them after they dropped them twice, and now they made them. And there's some other things out there. We're going to talk about it today. But I think that I'm kind of taking a darker view of it, and we'll get into the reasons why. On this day in 1914, we were talking about this the other day, just weeks after the assassination of Archduke Ferdinand in Sarajevo, stock exchanges in Berlin, Rome, and Vienna shut down as the Austria declares war on Serbia. Investors panic in New York. General Motors plunges 34%. Bethlehem Steel dropped 14%, even though it was going to make a huge wad of cash and metal, making munitions and tanks not too far distant future. The Dow Jones Industrial Average tumbles almost 7% to $71.42 on an immense volume of 1.3 million shares. That's always Jason Zellwig's blog on this day in financial history. So we'll keep an eye on it. Let's see. There's a few things going on there. I wanted to talk about AAP, Advanced Auto Parts. Anytime I see a sale in the last couple of days of the month, I tend to think that there's something going on, like the company's not going to make its quarter. And if it's just a regular sale, like 5 or 10% off, like they always have, that's one thing. But I just in the auto parts business, it looks to me like I'm seeing a lot of promos lately, and they're not little tiny promos. I bought a set of shocks yesterday that would cost me $120, $115, and got them for $76 or $78 or something. Using these coupons. I think it's you can up to $50 on $125 or more. But normally when you see these monster sales on just about anything anybody carries, you have to really start thinking, why would someone do that in a retailer, in this one, auto parts? And the last couple of days of the month, when you see those ads, I tend to think that we may be starting to see some weakness in some of these auto parts manufacturers like Advanced, but they're the only ones that have done that. We talked about how some of the car manufacturers started to look rather weak starting about 10 days ago, and now we're starting to see a lot more of the talking heads on financial infotainment talk about a weak or weaker automobile business. We see inventories starting to rise. And just one more data point out there that hasn't. Of course, if you need an auto part, I'd go to their website and I think the promo code is WD31 or something. You type that in, and if you need a part, huge discount. So maybe that's worth listening to this show just by itself. There are lies, damn lies, and statistics, they say. I'm going to say there's lies, damn lies, and non-GAAP earnings. Saw a great deal of stocks starting to flip over in the last few days to non-GAAP. And, of course, GAAP, if you're not familiar with it, is generally accepted accounting principles. USA GAAP, or GAAP stands for Generally Accepted Accounting Principles. The U.S. is trying to move to a slightly different system. And right now, a lot of these companies just barely making their earnings have changed to a non-GAAP system. That means that the books can pretty much mean anything that they want them to. They've been doing a lot of things. In fact, Twitter's results, if you took out all the charges and stuff, they lost money. So it wasn't a giant win or the big win that everybody says it was. I think it was a win. I just don't think that the magnitude is as big. And part of it is because these guys are using these non-GAAP earnings sometimes to freak the market out and run a lot of accumulated shorts out in a fairly short amount of time. But just a thought out here. Of course, there's lies, damn lies, and GDP. The numbers this morning, most people are going to say, hey, 4%, that's great. But you do know that all those things actually changed. I mean, by changed, I meant that they are drastically changing the way that GDP is calculated. And by doing that, they've added in a great deal of things. In fact, I saw an article from about a week ago that said that just adding the intellectual technology part or intellectual property part of movies that don't sell in China, that they could mark up the GDP just by itself 3% right there. I don't think that they did, but I do think that we're probably much closer to 2.3% than we are to 4%. And unfortunately, there's not an easy way to back out all the different stuff and see exactly what the GDP would be as if it was reported the last month. And hopefully someone will do that. It's going to take somebody that's got a lot more time than I do to sit down there and do it. Maybe that's what they're looking at. But the tales of, especially somebody asked, I think in the den, why the market was selling off not very short after the open. And my comment was, nobody believed it. In fact, I wrote that in the newsletter this morning. Nobody really believed that 4% when they heard it. In fact, I heard calls of bovine excrement on the trading floor on CNBC. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we talk about GDP numbers and we drag them apart a little bit, about 1.6% of that 4% was a huge increase in production that's sitting in a warehouse, and one of the largest quarterly increases in GDP. So we've got a lot of stuff that is building up in the warehouses that probably won't have to be built in the next quarter. So I think when everybody started dissecting these numbers shortly after the beginning of the morning trading, that's when we saw these things really starting to pull back, and also digging through the numbers, figuring out that a lot of the 4% was actually new intellectual property and trademarks and all kinds of other goodwill being tossed in. And it's not too bad, too far from probably what reality is. If you back out the huge increase in a warehouse inventory, you basically get down to 2.4%, and you take out maybe some of the stuff that they've been adding in here. Maybe you've got 1.8 to 2.2, which is kind of in the range of what people were looking at. That 4% was, at least on the trading floor, I think everybody looked the other way, and they knew what was coming. They didn't believe it for a second when I looked at them, and I don't think many other people are going to bring and believe it. It is a new regime, and again, you can change the way numbers work, but you know, what it is what it is. So just looking at that. One of the comments out here earlier this morning on the back of earnings releases by Corning with their Gorilla Glass is that tablets boomed and are now crashing. We've been talking about this for a while. probably the last 2 months on the Tech Insider and on this show too. But this is the CEO of Best Buy. Tablets have boomed and are now crashing. The volume has really gone down in the last several months. But I think the laptop has something of a revival because it's becoming more versatile. So with the last 2-in-1s, you have an opportunity to have both a tablet and a laptop, and that's appealing to students in particular. I think that's very good. I haven't wanted a real laptop. I bought one last Christmas, but I bought a very inexpensive one knowing that I would be waiting probably for this upgrade cycle in Intel and the Surface 3 from Microsoft to get something I wanted, which is probably going to be about $1,200 to $1,500 when I get done, but I'll probably buy it in September. Hard for me to justify it since I spent 98% of my time in front of a computer in my palatial estate and not out roaming the world with a laptop. Normally the phone is all I need when I am out. But the 2-in-1 thing, a pretty good idea. And in fact, I've got a Android tablet that does nothing more than as a remote for Netflix and YouTube and a handful of other things. Don't really do much and listen to some audiobooks on it if I'm in the hot tub or in the pool or something. But what you have to do is think about how effective these 2-in-1s are. One, the one I have, I love because it is a full Windows operating system, so I can put anything I want on it. But when I go to websites, I don't get the crappy website for mobile that I get if I'm using a tablet. So I get the full-blown stuff. Spotify didn't try to randomize my songs. I can listen to them just like my desktop. And not a lot of distinctions between it. And, of course, it runs every Windows program ever written for the most part. Doesn't have a lot of memory. Doesn't have a lot of other stuff or high-resolution monitor. But that's probably why I'll be going to that Surface 3 laptop sometime around September, I think. I want to just make sure that there aren't any more problems. May even wait until the next revision of Intel's processors might be October, just because they're so much more power efficient. But I'll have to see if there's any discounts on the current Surface 3. But the i5 version of that for about $1,000, about $1,200 with some additional memory, and the keyboard about $1,350, minus a 10% off coupon that you can get at your post office for Best Buy would bring that into about probably around $1,250 for one I'm looking at. So I'm looking at it, but we've talked about this for a while, and it's really starting to look like what Samsung said is a lot more true than what Apple was talking about in both the tablet and small phone market. Anyway, we're going to be back in just a minute. You can give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And I talked about it a little bit, I don't know, probably a month, 6 weeks ago, about the fawning all over the current CEO of Yahoo. I said that there was something very, very wrong in the way that maybe she's being treated compared to the woman CEO of Hewlett-Packard. They were fawning over because, of course, she just had a baby and she's beautiful, and she was on the cover of some ladies' magazine, and a very interesting picture and all airbrushed and made to look perfect. A lot of times there are CEOs that are the sacrificial lamb, that for a great deal of these folks, there may not be saving the Titanic after it's hit the iceberg. There may be people to manage it. You put in a new CEO, they're going to get a little bit of honeymoon time. You also can't go right after and savage one of the pretty lady, or you're going to be called a clod and a misogynist. I said that probably that all the fawning on the media over was setting her up to crash and burn. And I was waiting for this, and this is the first, I think the first part I've seen. I've seen people kind of edging around the, or just kind of munching around the edges of the sandwich right now. But there is the first full-on attack for Miss Myers as CEO of Yahoo in Forbes, written by Eric Jackson. He's a big hedge fund dude from Iron Ironfire Capital. I suspect you're going to see more and more of this as the company doesn't trade more than $1 or $2 over what Alibaba should be. And when you hire somebody for a CEO, besides managing their huge position in another company that's doing well, you want to see something physically differently change. And so far, a lot of pretty pictures on magazine. Yahoo looking more and more each day like it's worth $1 over its stake in Alibaba. But I expect more and more of this to come in the near future. The Aetna CEO was out this morning, and I bet you're going to find it on the CNBC website, maybe some parts of it. But if you really are interested in how healthcare is going, I think it was one of the better interviews. They had people come back in and out. But I learned a great deal about it, but probably the most important part of it is exactly what a lot of people had feared, and that was by putting a lot of people in a healthcare system for insurance that have never had it before, they would tend to overuse it. The utilization was way up, even though the weather was horrible. In fact, one of the CEOs of I think it was Cleveland Medical, said that in one day his hospital chain had 10,000 canceled appointments because of the weather was down. What you do find out is that they are using the absolute dickens out of healthcare now that it is free to them. Interesting take on, and he's dancing on a political line. He wouldn't be the first CEO to say something that was political to rouse the ire of the administration and put his head on the chopping block. I can remember that the CEO from General Motors, he'd last 2-3 days after he said something. So you have to kind of watch it. But it is a fairly jaundiced view about how much money has to come out of the system. And he brought up some words that a lot of people don't like death panels and restriction of care. He thought, just like most of the people they had on, that there was a opportunity to make people responsible for what they're spending on health care, and that could happen. But to take 20% out of the cost of health care, I think the Cleveland medical guy was bringing that up, is kind of a Herculean effort, and I don't know if they're going to get anywhere close. If they could bring 5% of the cost out of medical care, I think it would be monstrous. But that's it. What else do we have going on out here? China corruption, we brought up last week about Jim Chanos just getting back from China. Of course, we've been talking. We talked about that Friday, him being on Charlie Rose and talking about the huge purge of the corruption in China. Of course, they hired, or actually grabbed a guy on Tuesday night, I guess probably on Monday night, who's one of the highest ranking gentlemen ever to be in the Chi-Com party. And you just don't get there's no real bail or anything. They just take you off and you kind of disappear. He's kind of disappeared so far, but this is the highest ranking guy since 1949 to be yanked off the street. But they are truly going after corruption, and this may be one of the most bullish things for China that I could ever think of. Most of these guys have had their hand in the till and or caused intermittent problems, especially when they had the little blip a few months ago. But they're starting to whittle through all the bad actors over there, and you're just going to be marched out into a field somewhere. And looks like they're going to continue on that, but it doesn't look like it's just a PR stunt. It really looks like they're going to go after anybody that's fairly involved in corruption in the Chinese government. I guess more power to them. After the bell tonight, Akamai expansion, C-Trip, LifeLock, Weight Watchers, and Yelp are the ones that I'm looking at the most closely, but there are a ton more coming out before we get back in it. It is a mad stock market. And, of course, you can give me a call at 877-927-6648. And we look back at up 2.5 points on the S&P cash. Volume is whizzing along, 2.4 billion shares. And volume was good before we got there. So I still suspect that we've got a 75% chance that we hit 1938 before we hit 2000 on the S&P cash. So I am heavily weighted to the downside. And normally now the Fed's been out, should have a lot of opportunities for fund buying to start right away. And we'll see just how close those numbers from Trim Tabs are about and how those companies are being received. I had a few stocks that I wanted to look at. And, of course, it's kind of hard to see. Let's go ahead and update the XLE. Wanted to see whether the volume was picking up in the XLE, and it's actually starting to now. I probably like the general market, but there were a few other stocks out here I wanted to take a quick look at. Some of these a little bit different, but we shall take a look. Aaron's, take a little bit longer look at Aaron's. There's a nice gap out here, and there are a few of these stocks starting to line up. This thing took off on the 7th of February with a monster amount of volume and a gap. That gap is now starting to get filled, and it is looking rather interesting as to getting it filled, certainly with much lighter volume than that gap. Even the last time it came back in here on the 15th of April, you only had 3.9 million shares compared to the, 359,000. So there are some stocks out here that certainly look like they're bottoming. And there's some others out here that you want to be seeing volume in these things fairly quick. Araris Group is one of these stocks that, boy, it needs some love, and it needs it now. It's busting out from its consolidation range, which is just about $34. And, of course, the last major high this thing is going into was the June 20th high at $34.22 with 22, what is that? Is that 0.22? No, it's 22 million shares. That was a huge volume day. So the last 3 days, 2.3 million, 1.8 million, and today 1.5 million so far. So you have to start looking at some of these. Darling International, another one that looks like maybe this thing could be finding a bottom. These guys have kind of an interesting business. I'll go ahead and read it again. Natural ingredients from edible and inedible bionutrients. So, pet food, technical fuel, bioenergy, fertilizer industries. They're covering all the bases with this one. But I do like the way this thing came down with heavy volume on June 3rd, $18.92, 1.6 million shares. And the last 2 days, 930,000 shares yesterday, and 700,000 so far today. So a lot of these not all that bad. Another one is Hill International. Another one out here you could take a look at. Had some huge volume bar down yesterday. Now, volume did pick up a little, but nothing compared to some of these bigger volume days. And, of course, this thing is still below that $4.89 low from May 9th. But if this thing would pop back into the trading range, it would be very interesting. Of course, we've been talking about housing getting whacked, and certainly not looking any good. Ryland also is going into its gap up. That gap is from September 6th of last year with 2.5 million shares, 1.4 million shares so far. So still lighter volume out here, but my guess is that you're probably going to find at least some support, even with the horrible news pretty much surrounding a great deal of the housing business now. TWI, which is Titan International. This is kind of an interesting stock, making a little move out here, nice move up today. It did make a fairly good test of its September 30th low at $14.14 with 1.6 million shares. Got into it with July 28th, $13.93. It's closed back above it yesterday, which is your buy signal, and it's back up again. Now, of course, it's going up against some heavy volume down, and you need 1.4. Let's call it 1.4 million shares on that gap down day, and of course it's light volume today. So that gap is probably going to act as a little resistance. But we are seeing some stocks come down, hit some bottoms, and starting to find, or trying to find, some bottoms out here. UBS, this thing has blown through its November 5th low of last year at 1794 from November 5th with 7.2 million shares. Yesterday we saw 2.6 million shares. Today volume has picked up. This thing would desperately need to get back into this trading zone above $18 sooner rather than later. If not, this volume accelerating could open up some even lower levels. And of course, there's a nice gap out here right around the $15.50 level. VSI, Vitamin Shops. This thing is certainly looking rather interesting. And that is this thing bouncing along this $40 level. Really looks like it's got some decent support. And the energy is kind of coming out of this one. If we look just a little closer out here, I really, not too bad out here. So there are some stocks where the energy is coming out. And if you're watching on Tiger TV, you can see the first bounce at $40 had 1.9 million shares, the second 1.5 million shares, and then, of course, the one yesterday was 750,000 shares. And I'm kind of bearish here, but we could. There are a few out here that are interesting. After the bell tonight, we're going to have a slew of stocks, and some of these. Going to take a quick look at how these things are doing, and what they're doing. Akamai Technologies up volume just a little bit better. This thing's been hanging around its highs. Did challenge its highs within 50 cents or 40 cents back here on June 24th. But the volume was about two-thirds of what it needed. Needed about 3 million shares, came in with about 2 million shares. Did not pierce that high, though. And earnings after the bell out here. A lot of the good news is in a great deal of these stocks already. And, what can you say? Let's take a quick look out here. Okay, we're down 1 point on the S&P cash, closing in on 2.5 billion shares on the New York Consolidated Tape. So, I'm still pretty much thinking 1938 is... looks like it's getting more and more likely. I'm going to boost that up to 80% chance of seeing 1938 before we see 2000 on the S&P cash. Be back in just a minute. Still have plenty of time to get me.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And ahead of earnings, Yelp had a lot of short interest in it, and they're already starting to run some of these stocks that have earnings after the bell. Actually, decent volume in Yelp and a pop, mostly based on the Twitter move. Everybody thinks that they're going to be able to do the exact same thing. I think Yelp is a whole different can of worms out here. Of course, Yelp, a much better version of Angie's List for the most part. You don't have to pay money to join it. You don't have to do a lot of other stuff. I think Angie's List is pretty flawed, which reminds me of Groupon, which I hadn't talked about for a while, GRPN. I hadn't bought a real Groupon deal in a while. I actually bought one Sunday, and it wasn't from Groupon, though. It was from Amazon Local to go see John Popper and Blues Traveler this weekend. But that's the problem. In fact, when this thing first came out as an IPO, Tom and I were talking about it on the air, and just one of the reasons we hated this company was that it would be so easy to do what these guys did. There was no true barriers to entry. And I see the CEO that got booted from this company is out pushing yet another startup you just kind of wander around, and the GPS in your phone gives you a guided tour, tells you about buildings and everything. It's kind of like a guided, I think they call it guided tour. But they've been pushing him the last couple of days, and he's been banging the drum on that deal. Of course, he's had 3 public companies, all of them have blown up spectacularly right after they've gone public. Maybe there's a fourth. Maybe the market just never does, Lauren. But I will be looking at it. Of course, after the bell again tonight is Western Digital also. A lot of these stocks just hanging right out here at highs. And I could think that we could see some of these start to see more weakness. But is it worth taking a bet on all of these? And it is somewhat problematic to do so. Let's see what else we have out there. I know we were looking at Yelp, and no real keen things in that. Akamai, DDR, Glue Mobile, Higgs, Hawson. There was one more. Oh, LifeLock. I wanted to see how this thing did. Kind of interesting in this stock out here. It's right up against its previous high. 20 cents lower from the June 26th high, but hanging out here for earnings just after the bell. And it still has a high volume low out here, but you need to know about before you would start trading this. But that's one of the ones I'm looking at playing a little white lightning in after hours out here. MOH, which is Molina Healthcare. Not a lot in that one. There was one other one that I saw out here that really kind of interested me. Maybe it was TSO. This one's been going sideways for a while. I could see this thing really moving out if it had any decent news, both up or down. The Tereso company, it is, pull its profile up here real quick. Engaged in refining and marketing petroleum products in the United States. This thing looks to me like it's been in some distribution here for a while, since back on this low back on June 25th. So we've had, probably 20 days out here of what it really looks to me as distribution in the stock. If we go back and look at a little longer version of this thing, fairly weak test of the December 2nd high from last year. Anyway, make sure to sell when you can, not when you have to. See me here tomorrow. Same bat channel, same bat time. And I appreciate you all listening. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.